Yeah, everyone, we are back again. Good morning, good afternoon, and good evening to all those who've joined us. I'm Anish Krishnan, Head of Marketing here at QKS Group. I welcome you all to today's session on where policy administration still falls short at execution, priorities for insurance operation leaders in 2026. Once again, thank you all for joining us. Over the past few years, insurers have made significant investment in modernizing policy administration systems, let's say adopting cloud platforms, improving configurability, and enabling digital distribution. Yet many organizations continue to face operational challenges across underwriting, policy servicing, endorsements, and renewals. Well, the challenge is no longer modernization, and I'm sure the experts will agree with me on that. It is ensuring that modernization translates into measurable operational outcomes. Well, in today's session, we'll explore where policy administration workflows continue to create bottlenecks, why execution gap persists despite technology investments, and what insurance leaders must prioritize this year to improve efficiency, visibility, customer experience, and profitability. Well, I'm pleased to introduce you all to today's speakers. Divya Baranawal, Vice President and Principal Analyst here at QKS Group. Along with Divya, we have Anandh Ramaswamy, Practice Director for Financial Crime and Compliance. Well, together they will share practical insights and real world perspectives on how insurers can move from modernization to operational excellence. Well, we encourage all of you to raise any queries that you may have throughout the session in the Q&A section below, and we'll surely address them towards the end of the session. With that, let's get started and over to you, Divya.
Thank you so much, Anish, and I welcome everyone who's joining today's session. Now, today's session is not essentially a framework, right? It is what we have seen and we have been hearing from carriers, operation leaders, practitioners. So these are the insights that we have packaged it for you, and we want to make all these insights as actionable for you as possible in today's session. So please be tuned. Now, this is the agenda slide. Now, what we are going to do today is, the way we have structured is we have organized today's session into four parts. First, we'll start with the landscape and the gap. So we'll highlight about where the industry actually stands, what are the execution gaps, and why we see policy administration becoming a board level risk in 2026. Then we will go into where platforms are falling short. So we'll highlight some critical execution gaps, and these gaps have been directly drawn from our VOC survey, with which we saw very good traction and response from insurance carriers. So this is something that we have observed, and these insights have been captured across markets and carrier sizes. So that's the second one. The third section is where we'll encourage operation leaders to engage more closely are the strategic priorities. So we will place out for you five action points that you should take for your next planning cycle. And the last one would be, what good looks like, some of the operational or financial outcomes that is supposed to come if you close this gap of execution versus reality. Now, we leave some time for questions at the end, so please make sure to post your questions in the chat box. Now let's move ahead and let's see what does the operational landscape for insurance looks like. Now, if we see in 2026, some stats that we have is definitely the premiums are growing. This is one of the stats that the global premiums were 7 trillion euros in 2027. Now that's huge, and that is pretty much industry's strongest growth over a decade. So what we are seeing here is there is a real market opportunity. Market is expanding, and insurers, as we see from this data, is that they should be able to capitalize on this, right? But while we are having the conversations with carriers, what we often find out is that this premium growth is not often and mostly rather not getting translated into operational confidence. Now, that's a problem, right? because when we look at carriers, there is expense ratio, there is regulatory posture, customer retention. So these are not just the problems of large players. This essentially is what we see are the problems happening across carriers. Uh, the number two that we see in our research is that there are two figures which is coming up through our research, and the first one is that around 35% of carriers, they are still operating on their core policy admin functions on dated infrastructure. So these infrastructures, basically, they can't support real time data. They're not very configurable. Also, they can't accommodate automated regulatory change. So these problems are essentially, I would say, not technology oriented, and they compound and they grow and become bigger operational risk with every passing quarter. So that's essentially a very big problem. Another problem that we see often is that, uh, from an underwriter's point of view, where their time should be mostly spent in, risk judgment. We see that, 40% of their time is getting spent in administrative tasks. Now, that is not what they're meant to be doing, right? They're meant to be spending time underwriting risks, while what they're doing is what essentially the system should have essentially done. So these are some of the challenges that carriers are living with today. And as we go ahead, we'll see how we can solve these challenges. So moving on to the next slide. So this is essentially the execution gap that we have, and these insights, as I said, is derived from our, year-round research with insurtech vendors, with carriers. Now, if we talk about the education gap, we see there are four distinct patterns which has come across through our research. Now, the first one is that first, definitely there is premium growth that is happening, but uh, the operational maturity is not that great, right? Carriers are writing more businesses on infrastructure, and this infrastructure was, I would say, built for more simpler and slower market. So that is the reason why, if you are working on an infrastructure which is not built for current times, what you will see is that fractures happening across your system, and this is becoming very evident through expense ratios. This is becoming evident through the compliance timelines or the claims consistency that we see. So these are some of the issues which carriers are seeing. So that is the execution gap. The second problem that we see is on the pace or the regulatory acceleration that we are seeing. So there are multiple regulations coming in, right? There is IFRS 17, Solvency 2 updates, consumer duty, state level reforms. Now, all of these basically require policy level data. But essentially, if you are working on legacy environments, you cannot produce this automatically, right? So, what happens when a regulator is asking you for these data? You go back to manual workarounds. Now, these manual workarounds, definitely first thing is costly, but also it introduces more risk, because manual processes, as we all know, they are prone to more errors, and they create, not so perfect audit trails. So those are that is kind of the second problem that we see, in this industry. The third problem that we see very much happening here is, there is, a huge arrival of digital native carriers. Now, these carriers are able to issue policy in minutes. We also see multiple examples today of embedded insurance products, which is happening at the point of sale. We are also seeing usage-based products which are adjusting premiums in real time. So definitely the gap exists, because the incumbent players, they cannot deliver on this, and all this essentially gap is has become very visible to customers. And for customers, if you can't prove it, or if there becomes a friction, that is a problem. Because once a distribution partner, they can see the gap, of course, you are kind of having difficulty in routing all the conversations. So that gap is there, which is the digital native carriers are bringing into picture. The fourth one, which is where we will kind of spend more time today, is what we also call the configuration execution gap. Now, this is kind of, I would say, the defining operation risk of 2026, because policies are getting configured correctly in the systems, but they are not consistently delivered in operations. So, what is happening is that any manual override, decisions are made in silos, the configuration changes are happening, but they are not getting tested properly. So, all this, while it is happening, over time, the system's capability and what operations actually experience, they have diverged significantly. And most organizations, the way we see it is that they do not have a clear line of sight about how this divergence, how wide, I would say, this configuration versus execution gap has become. So these are a couple of execution gaps that we constantly see. Now, we will deep dive on four execution gaps in particular, and I will pass it on to Anand to take you through these execution gaps in depth. Over to you, Anand.
Thank you, Divya. And you have banged on, hit the nail on the head perfectly by setting the context well for it. Guys, let me tell you about a conversation that we have almost word for word with operational leaders across carriers. Okay, we ask them, where does your underwriter spend most of their day? And after a pause, or sometimes even a longer one, the answer is usually the same. Honestly, they spend most of the time in admin than I would like to admit. That pause, that's the moment someone is doing the math they haven't uh, done out loud before. Nearly half of the underwriter's time in a typical mid to large carrier goes to a task that have nothing to do with assessing risk. At the same time, chasing data or reconciling records, managing exceptions, are all not what they are doing. They are navigating system limitations that require human bridges, and every one of those hours is sitting in your expense ratio. It just doesn't have a label on it, but it goes into it. Now, here's the important thing. This is not a people problem, let me tell you. These are skilled professionals doing what the system requires them to do. The system was built for a world of stable products, predictable distribution, and occasional regulatory updates. That world no longer exists. That is really the bad news. And a system designed for that world operating in today's environment requires constant human intervention just to function. The people aren't the people. It doesn't mean that the people are inefficient enough. This is just the mismatch over there. And then there's competitive dimension also to it. And this is the part that should concern boards. Moving ahead on the same topic in the same slide, if you look at it, carriers that have modernized their policy admin infrastructure are not just running faster. They are launching new products in weeks, not quarters. They are implementing regulatory changes before the compliance window opens up. Not even after that, but even before what really comes out. And they are onboarding new distribution partners at a fraction of a cost. And every year that gap isn't closed. It compounds, like what Divya was telling, it compounds. The carriers on the other side of this are not standing still while you decide, guys. Just understand. The good news is that, let me put it, and I want to be clear with the good news also, is that carriers improving fastest are not the ones that did the complete system replacement. They are the ones that have made targeted, sequenced changes, modernization, which have to mean in a, I would say, which would have been in the last 5-year program. It can start with a decision made this quarter too, and this would really help you guys in looking at the future much better. Moving ahead to the next next two gaps, which is on the regulatory execution and data readiness, which is on next slide. I want to here I want to share something that comes up in almost every executive conversations we have, and it's usually the moment in the room that changes the energy. You know, we ask how long is the compliance window right now, and most of the time the answer the answer to this question is in the version of what do you mean by compliance window? So let me define it because it matters enormously. The compliance window is the period between regulation takes effect. The day it's live, the day it applies to your business, and the day your policy admin system has been fully updated and tested to reflect it. During the entire period, every single policy, transactions, your team process, your backend processing team that they work on, that carries a regulatory risk, all needs to be looked at. These are not theoretical risks, let me tell you. These are real, examinable, regulatory actionable risk. And for regulations like IFRS 17 and consumer duty, that window has run to months for carriers we work with. And in many cases, the leadership team didn't know that it was open already. Now let's connect this to the second gap, which is on the data readiness, because they are the same problem wearing different clothes. You know, think about how many places policy data lives in your organization right now. Your underwriting system, your claims platform, your actuarial models, your complaints reporting, your insurance border you. Each one holds a version of the truth. Each version was last updated at a different time, and somewhere in the middle, someone is manually reconciling them day on day, week on week, sometimes quarter on quarter too. That fragmentation isn't just inefficient. It is, I would say, it is a single most common reason we see AI and analytics investment in the insurance stock. The pilot work that needs to be started, the proof of concept looks great in the demo, and then it needs to hit the production data. Understand? And it falls. That is where it falls apart. Not because the models was wrong, because the data beneath it were never clean enough. That is the issue behind it. They are never unified or governed enough with supportive data. And regulators are now asking for something more most of the carriers can't produce automatically or evidence them across. These are not control gaps. Not that control doesn't exist over here. They want, or they are looking at control which exists in your systems. They want evidences that controls worked, customer outcome data, and they're also looking at compliant trends, claims handling consistency. These are all what the regulators are looking for, and they're also looking for something more on the pricing accuracy over time. And this is something which we need to really unify it across and really bring it together. And also remember, when a regulator asks for that, how long does it take your team to pull it together? That matters a lot. The answer is going to be in days, and for most carriers it is. That process itself is a finding for the regulators. And increasingly, regulators are treating it as more and more risk associated rather than telling that you have got big business. It is just the risk that they are looking at. Moving ahead to the next slide. What good looks like, the operational outcome available to carriers who close the gap. In the last few minutes, I've spent describing a set of problems that honestly can feel very heavy. So I want to shift now, because this is the part of conversational I genuinely enjoy. Because the carriers that have closed the gaps, the outcomes are real, they are documented, and they are available to you now right away. Let me walk you through what actually happens, okay? When a carrier modernizes its core policy admin infrastructure, not wholesale replacement targeted modernization happens. The first thing that changes is the IT cost per policy. It comes down meaningfully. Fixed compliance overhead becomes variable. The team that was spending 60% of its time on maintenance starts spending it on value adds. That's not a small shift. It flows directly into the combined ratio, just what Divya was speaking on the expense ratio. When intelligent automation is deployed, in claims and policy operations with proper governance, which we will come to in the cycle times by reducing weeks and days. And when cycle time reduces, complaint rate falls. And when complaint rate falls, retention improves. That chain of outcome is real, and it shows up in all the P&L and the balance sheet across. When claims experience data feed back to underwriting in real time, then that becomes possible for it to be unified, and the pricing accuracy also improves because of it. The organizations, the loss ratio move, the carriers will be able to see with most consistent combined ratio performance, which they have closed in the feedback loop. And these are all coincidental, when it happens all together. And when the change management is treated as a program, it's even much, much better. It's not a work stream within the program, understand? Not a transformation deliver. The organization that allocate real budgets to people alongside technology, that name a senior executive as an owner, which means to say that when they do in the change management with the senior executive as an owner to that change management, then it makes a lot of difference. That brings underwriters into design rather than just testing. Here's the question that I want to leave you all with, and I would genuinely encourage you to take this back to your next leadership conversation. What would a 2-point improvement in expense ratio mean for your combined ratio, and what is preventing it? Sit with that number for a moment. For most carriers, it's significant, and the path to it. It's almost in every case that we have seen, it runs directly through your 4 gaps that we have just described into it. Legacy infrastructure, operational overhead, compliance window risk, and data fragmentation. These are solvable, and the sequence needs to be understood, and the outcomes are documented. So with that, I leave you with all the execution gaps and how it should really look like. Moving ahead.
Well, Anand, I would just like to take a moment here. We're getting a lot of queries, especially regarding this execution gap, both Divya and Anand covered here. So to all those who are watching us live today, do check out the VOC reports, which is from the BFSI domain in our market research listing page on QKSgroup.com. You will understand how these execution gaps have been derived, how the methodology has been processed to find these gaps. This is a very insightful report. Do check it out. Most of the queries that has been raised right now will be resolved to find that. Now over to you back again, Anand.
Moving ahead, strategic priorities. Divya would like to take the strategic priorities. Divya, you're on mute, I think.
Oh, yeah. So thanks, Anand, for telling us about the various execution gaps and highlighting there and what it means for operational leaders. Now, in terms of priorities, we have categorized into 5 priorities what all operational leaders must look at. So first priority we are saying is that definitely, and we are also suggesting that you must modernize your legacy system. But the modernize, what we are suggesting, should be a phased one and should not be a rip and replace, right? So what we are suggesting is that stop adding to legacy. So first action is not a replacement program, right? So stop adding new complexities into your legacy system. Look at, do a check of your existing system. Wrap existing APIs. Every new product distribution channel, regulatory requirement. Try to see what all you can wind up and which all parts of your legacy system you can modernize. So look for a phased modernization. And this approach is definitely executable in months, right? The second one is migrate one workload at a time. So do not look at the whole project. It's a very big one. Modernizing everything at once is definitely not possible. And these are the modernization programs we see fail. So our what we advise to carriers is that, identify your single highest friction workload, and once you do an assessment of that, that should be your priority list number one. That should be the one you should look at modernizing. Uh, so then after you do that, measure the outcome and show it to your board, and therefore you will get a justification for your next modernization plan. So that way you will get approval from the board, you will be able to show some results and go in that way. The third one is measure what board cares about. Here we see what many operational leaders fail to do is that uh, they just focus on getting things done. They do not look at showing the results to the board. And that is why if you are not able to get buying from the board, it becomes difficult as you move along the modernization journey. So what we suggest is that do not look it from technical milestones, but do track business metrics as well. That is very important, which many leaders fail to do that. So, measure things like time to launch, time to implement, look at manual touch points. And if these are not improving, the program is not delivering. So there are multiple business use cases. Look at all those use cases and not just from a very technical lens. Look it from a business lens as well, is what we are suggesting. So that is the first one. The next one on the priority list is moving ahead. So the second one is fix the data foundation before deploying AI. Now, Anand has definitely touched up on those, and what essentially he has said is that data is very important. If you try to deploy AI without looking at the data, it is definitely those are the pilots which are not going to work. So what we suggest is that look at the single source of policy truth. Like Anand said, the data resides at, look at where your policy data is residing. It is residing in multiple systems, multiple places. Now you have to build a unified approach where you identify each and every uh, source of your data and try to reconcile it, right? So this will definitely, uh, uh, you know, mean that you are not you're building a migration plan, but not everything at once. So that is a path to success where you are building for one product line at a time and defining the clear governance framework. Extremely important. The second one would be governance before scale. Now, what many insurance leaders we see fail to do is that uh, they uh, the moment they see success in one AI use case, they quickly move to the other. They do not look at building proper governance model in place, right? And if a use case is giving you a quick win, doesn't mean it is going to long last. So that is why we suggest you should have a very solid governance model. Look for model validation, ensure that you have proper audit trail in place, explainability documentation is there. You have proper override framework. So all those things must be built in, and before the first production deployment, make sure that all these checkpoints are also in place. The last one would be incremental automation progress. So what this essentially is that the transformation programs that fail are, where the data is not done properly. So our advisory work supports a very different approach. What we are saying is choose one domain, govern that correctly, make sure you have all the documented outcomes, properly done, and then you build the organization capability around it and get board's confidence. So this is we would say an incremental process, but make sure you have auditability tied in throughout that process. So very important to look at your data before you start deploying AI. The third one is essentially where I'll spend a little bit of time, because you know our advisory work, we consistently see that this is the area where leadership teams often underestimate both risk and opportunity, and this is about outcome based compliance. Now, the concept I want to introduce here is called compliance window. So this is a period between when a regulatory change becomes effective, and then when your policy admin system has been updated, tested, and validated to reflect it. Now, during that window, every single policy transaction that you process, it carries regulatory risk. So for obligations like IFRS 17, Solvency 2 updates, and consumer duty, that window can run up to months. And this is something that Anand also covered in this, section, is that these, when we talk with leaders, we see that lot of them, they do not even know that there is a gap that exists, right? So this compliance window gap is detrimental. Any issue that you have during that time can really be detrimental to your process. So this is something which we suggest operation leaders to look at. We suggest that they should build a more structured, time bound playbook around this, right? And from the moment a regulatory change is received, suppose, you know, uh, what they should look at is impact assessment, configuration, testing, validation. So the entire cycle needs to be mapped, measured, and managed. And once you measure it, you can set a target. And once you have a target, you can then start reducing it systematically. So follow this process, and then you have a more robust outcome based compliance built in. There is one more dimension to it, and which is what we call making compliance evidence automatic. Now, we know that whenever regulators, they're asking for any piece, any demonstration, there is a problem, because there are separate manuals. There are the policy data is spread across between multiple systems and units. So what essentially happens is that it requires a separate manual exercise, because you don't have data unified, and that essentially increases or delays the reporting cycle. So this becomes a problem. Uh, so leaders should look at making compliance evidence automatic. The third dimension here is more like a unified accountability across functions. So here, what we are suggesting is that, you know, um, uh, because regulatory accountability in insurance is spanning across multiple divisions, be it underwriting, be it claims, actuarial, compliance. So, because the data is residing in different functions, every system has different KPIs. So, whenever a regulator asks, a cross-functional question, now there is no way to provide it, because the systems are so fragmented. So, what we are suggesting is more like a unified policy data layer and shared outcome matrix. So this is something important, and this will directly connect, data foundation priority, like what Anand also covered. So these are a couple of things on priorities to look at. There are priority 4 and 5, which Anand can take, or Anand, you want me to continue with that? So let me know.
Yeah, I'll take over. Divya. I'll do that. Thank you. We also got two other priorities, which is priority 4, which is on scaling AI responsibly and then invest in change management, which I already spoke about change management. So the two decisions that determine whether any of these sticks is very, very important. Let me be honest with you about something that we see happen more often that should. A career invests in AI, the pilot looks extraordinary, the demo impresses the board, and then it goes to production. And then moment it goes to production, Murphy's law apply, and it doesn't work over there. Not because the technology was wrong, because the data underneath it wasn't ready. Let me tell you. Because the governance framework wasn't built for it, because the people who knew where all the edge cases lived weren't part of the design. And 6 months later, the program is paused, the team is frustrated, and the board is skeptical of the next proposal. You have a problem in again getting funding, you have a problem in again governing it across. It all falls into that. And this sequence is avoidable. And the way to avoid is it is sequencing data of this kind of a sequence is by data foundation being correct, and then looking at the AI. The carriers achieving production grade AI outcomes do a lot of pilots and not just proof of concept, let me tell you, but operational AI with documented P&L impact is very, very important. And these are the ones that I would say are the ones that sorted that data governance before they deployed into a model. That sequence is the difference between AI that works and the AI that does not work, or just a cost to the company, if I have to put it in other words. When you do deploy, start with the back office, exceptions triage, standard endorsement reconciliations. Look at what is the high volume, lower regulatory complexity issues. Look at measurable outcomes. These all would help you out in understanding it much better. Where do you really need to deploy AI? Each successful deployment builds your board's confidence, and go phase by phase, I'll tell you. And like what I told you earlier, it's a 5-year term. So you need to do it phase by phase. You need to test it out. You need to really work, see how does it work through. And this builds your team's capability and gives you the documented business case for the next initiative too. So from what you do it in, when you do it in phase, you know what your where did you really miss it out, and from there you can really rebuild it, and then it gives you a lot of confidence. And the team also would really, for the next deployment, they would also know where do they really go wrong, and they could really build it on them. And remember something, governance is never non-negotiable. Every AI deployment in insurance, every single one needs a model validation framework, and explainability standard, and audit trail, and a documented override process. Remember, regulators will ask for them, and building them retrospectively after you have already deployed it is dramatically more expensive than getting it right at the start. So it's much better to start with it and not end with this. Moving ahead to priority number 5, this is the one that most programs get wrong, okay? Let me tell you, change management is not a work stream. It's not a line item. It's not the training that happens in the last 2 weeks before you go live. It's a program. Here is the reality. Your underwriters carry institutional knowledge that no requirements documents has ever fully captured it. They know the exceptions. They know the workarounds to it. They know why the system behaves the way it does in certain edge cases. Because they have been navigating it for years, they have got the experience to do it. If that knowledge doesn't get into the design of your new system, it's a complete flaw over there. If they are not consulted during the UAT and only to confirm what's already been built across, that knowledge gets lost completely and you will not get it. So you need to involve your underwriters at the right place and the right time. And the new system recreates the, I would say, the problem the modernization was supposed to solve is just recreated over there, and it is going to add more and more issues to you and cases that would really go wrong. And this is not a solution based, but it is more of a problem which you will start looking at. The carriers achieving durable transformation treat their people as participants in the program, not recipients of it. Let me be very clear with this. The practical standard, if you look at it, at least 15% of your transformation budget goes to people. A senior executive is always owns the program. He's usually not a technology lead. Okay, it's a senior executive who is from the board who owns the program. Underwriters are in the room when the system is being designed. They are being brought into it. These are not soft recommendations. They are single factors which are mostly correlated with whether a transformation delivers its project outcomes or not. Here is what I would like to walk you away with from this section. AI is not a destination. It's a capability that becomes available once you have done the foundational work right. And the foundational work includes data, governance, people. This is where real investment decisions are live. The carriers that get this right just don't deploy AI. They build organizations that can absorb, operate, and continuously improve with it. And the capability, once built, is genuinely hard to replicate, and it's one of the best of its sort. That's the competitive mode. That's what is available to you all, and it's the way how we want to really use it. Moving ahead, we have the action plan for the next planning cycle. Divya would like to take it, or can I go ahead with it?
Sure. So thanks, Anand, for throwing light on the strategic priorities that our operational leaders must have. So after we have discussed, the landscape, what are the execution gaps that you are facing, and also giving you kind of a top five strategic priorities that you should consider. Before we wind up today's session, what we have done is we have list out a five-step action plan, and these will ensure quick wins. This is not something that you will put on shelf, but if you take these specific actions, you will definitely see the difference before your next planning cycle. So let me go one by one. So action number one, what we are suggesting is that you should commission a policy admin execution audit. So it is very important that when you go back, you map every manual touch point in your policy lifecycle. So quantify what is the cost, quantify your error rate, also the regulatory exposure attached to each one. Once you have this document, this document will become your business case that will subsequently fund all the further decisions, right? So this would be something that you can take to your board so that you can ensure you're getting the investments or getting the investment conversations at least moving. So that would be action number one. Action two would be define your single source of policy truth. Both me and Anand have kind of gone around it, how important it is that across your systems, you are holding one version of policy data. This is extremely important. Define your authoritative data model and migrate one product line, one at a time. So make sure governance is taken care of, make sure it is validated, make sure it's documented. So you do not need to solve everything at once, but do it one at a time, but do it correctly. So that is important. Action three would be building your regulatory change playbook. Now, you need to measure your current cycle time from regulatory effective date to system go live. Be honest about that number, right? Set a target for yourself, assign ownership, because that single discipline will make sure that you are able to close the compliance window risk that we discussed earlier. So extremely important. Action four, what you can take is deploying one AI automation with full governance. So do not get lost with the number of AI use cases you want to have. Do not go by that number. What is important is that take one AI automation use case, ensure you have built explainability framework around it, the validation model around it, audit trail around it from day one. So that is extremely important. And once you see the success of that, that just becomes it easy for you to move to your next use case. So that sequencing is extremely important. Ensure that it is in place for your organization. And last, what is very important is change management. Anand just talked about it. Do not take that lightly. Allocate meaningfully for training of your employees. Allocate for stakeholder engagement, capability building. Now, this is extremely important. Ensure that your underwriters are part of your designing. So these things are extremely important, and build it as part of your transformation journey and going ahead. So these are some of the steps you should take. Now the last slide talks more about what you should do in terms of just the conclusion. So quickly, if we bring everything together, what we see essentially is that the execution gap that we see is not a technology problem that I think we all have understood, and it's more of a business problem, right? So this execution gap, if it is a business problem, you need to have a business lens to it, and do not just look at from a technology point of view that you need to upgrade your technology. You have to look at from a more holistic point of view, and that you have to be specific about what decisions you should look at after your different paths are taken care of. So that's very important. Now we have also put in for different roles. So if you are a member of the board, or if you are a CEO, or if you are a CTO, CIO, what should be some of the questions or your action plan that you can think of? So if you are, a member of the board, ask yourself, what is your current time to market for a product variant? And what would a 2-point improvement in expense ratio mean for your combined ratio? Now, these answers essentially will be very important, and these answers will identify your investment case more clearly. For CEOs, if you are a CEO, what you should do is commission execution audit, map every manual touch point, and that document essentially will be the starting point of every priority conversation for you. If you are a CTO or a CIO, the takeaway that you have from today's session is you should define your single source of policy truth before the next AI investment. Make sure that the sequencing is right, data governance comes first, and then the AI deployment. So that order essentially will make a difference between the AI that goes into production and the pilots that fail. So this is essentially all our insights that we gather from our VOC and also through our discussions with numerous carriers and insurtech leaders. So that's essentially Anish, the
Thank you, Divya.
kind of a
Yeah,
bit
yeah,
of
thank
our
you, Divya.
insight.
Thank you, Divya. So I would say to all those who's watching us today, this is one of the I would say that this is one of the probably the most important slide that we have for you. That is, we have the details of the speakers today. If you have any further queries, we would like to support you in your decisions in your next cycle, like Divya and Anandh just mentioned. Do take a screenshot of any of you are traveling and listening to us today. Do feel free to reach out to us. You will have, they will help you with any queries that you may have throughout your when you plan for your cycle for the upcoming year. I have shortlisted two questions since we are in the last 10 minutes of today's session. I'll just quickly take you up through that and let me see what our experts have to say. So one question that has come up is they've tried AI pilots before and that hasn't delivered. But why do you think the next one would be different? Who wants to take this up?
Um,
Or do you want me to repeat this
well,
question again?
yeah, I'll take it, Anish. I think that's
Okay.
a very interesting and honest question, and uh, I really appreciate you, putting it bluntly, because that is essentially what question is going into the mind of most of the leaders that we talk with. So this is one of the very common conversation that we are having with leaders, and when we talk, we see that there is definitely a pattern to it. So this is kind of something that we covered in our presentation as well, but let me just put more focus here. We see that the pilots, that went wrong or that did not work. It was not because the use cases weren't identified correctly or the AI wasn't deployed correctly. It was none of that. Most of the time, when we try to find a sequence, we see that the data was not right. Right now, that looks obvious, but you would not be surprised if I tell you that 80% of the time when we see at or we evaluate these pilot projects, we see that the data in which it was trained, tested, it was not of production reality. So always what leaders are doing is that they are testing there, and they always say that no, we did test our AI models and it was perfect, right? So the problem is that your AI models, they were always trained in a controlled environment. Uh, there, the data was clean, the data was curated. But when your AI model goes into production, now there it comes across with data which is fragmented. There is inconsistency of data. Data is not reconciled properly across teams. So when your AI model hits the reality, that is where the problem occurs. So essentially, any organization who has not fixed their data foundation first, they're going to face this problem. So what we suggest is uh, you must look at fixing your data foundation first. So that is the first step you have to take. It might look like a Goliath, but trust us. Any AI model built on a wrong, unclean, fragmented data is not going to give you the right results. So the practical recommendation that we have is that before approving, any AI initiative or your next AI initiative, rather, you just go and ask your team one question. Ask, what is the data quality standard that this model will be validated against, and who owns maintaining it? So you have to decide the ownership, and if the answer is clear, if your team is clear, and you definitely have a good foundation, and that is you can say confidently that that is something that will reach into production and not just fail in between.
Very well said, Divya. Thank you so much for answering that. The next question is coming directly from one of our community member. Thank you for joining us, Sophia. Thank you so much. So your question this that she has raised us: our regulators haven't raised any issues with us yet. Why is this a priority now? And would you like to take this up?
Yeah, sure. I would like to take this up. This is a question that carries the most risk if the answer is taken at the face value of it. And it's worth being direct about it now. And the reason for it is by Regulatory scrutiny in insurance has shifted in the last 2 years. The FCA consumer duty, the IFRS 17 reporting obligations, and the increasing frequency of state-level market conduct examinations, especially in the US, and these all have moved in the same direction from checking, not just checking, but the process are existing to a demanding evidence that they would route to look at, and that process now is becoming a deliverable outcome for people. The question is no longer, do you have a complaint handling policy? Okay, it is, show me your complaint data by product, by channel, by quarter, and explain me the trend out of it. The carriers that have not yet received a challenging regulatory question are typically in one of the two positions. Either the regulatory engagement has not yet reached the level of granularity, is what I would say, that modern supervision that needs, or they are about to be asked this question, and they need to get acute for it. Neither of these questions, especially like show me your complaint data, these are not comfortable questions, and it is not a comfortable question to be in front of the regulators also, I'll tell you. On my past experience, it's being in front of the examiner is going to be very difficult. From our advisory work that we have found out that time between a regulator indicating they want outcome evidence and a carrier needing to produce it is typically much shorter than the time it takes to build the data. The infrastructure needs to be ready and should be made available to produce the reliable, real data at the time that the regulator asks for it. So you need to start building yourself into it.
Mm-hmm. Yep.
I'll also remember something more. If you really need to look at it, the window to build that capability needs to be proactive. You need to be, it is required, before it is required, by the regulator, you need to have it ready-made in your hand. And this cannot be reactive. Under regulatory pressures, we tend to make a lot of mistakes at that point of time. And significantly more expensive, it will become more expensive at that point of time, because if anything goes wrong, you are put on a lot of pressure, and it carries a reputational risk to you. And there's a proactive investment that also needs to be done to it. So look at it from this angle, the practical framing for your board. What would it really look at it? What would the regulators really look at? The question is whether the scrutiny will increase, or if the scrutiny is going to decrease, I would say it is only going to increase. And the question is whether your policy admin environment will be ready to respond it. I would say it needs to be built to respond it. So just get ready with it, and it is only going to increase further and further and further. And regulators are going to chase each of us very badly.
Thank you for sharing those practical insights, Anandh. To all our viewers, as we wind up today's session, I would like to sincerely thank all of you for joining us and being a part of today's discussion. Well, today's conversation highlighted that while insurers have significantly invested in modern policies or administration systems, achieving operational excellence requires more than just technology upgrades. Well, success will depend on how effectively organizations align systems, processes, data, workflows, and drive measurable business outcomes. A special thanks to our speakers today, Divya and Anandh, for sharing valuable perspectives and practical perspectives on the priorities of insurance operation leaders must follow to improve efficiency, visibility, and experience. And to all our attendees, thank you for your time, thank you for your questions, and thank you for your thoughtful participation. Once again, do stay updated to our latest research, our VOC reports, our upcoming webinars, and do follow us on LinkedIn at qksgroup.com. We look forward to having you join us in our future sessions. Once again, thank you. Have a great evening.
Thank you. Thank you all. Thank you all for attending.